How's it going, YouTube? My name is Ari and welcome back to Blue Lion Finance. Now, if you are brand new to the Blue Lion Finance channel, you're just stumbling across it for your very first episode, allow for me to personally welcome you here and sharing with you that this channel, Blue Lion Finance, is all about investing, as well as my very own personal journey to amassing $100,000 within my Vanguard brokerage account. All account updates aside, in today's video, I have a special treat for you all because we're gonna be going over the 5 dividend kings of kings. Now, for all of you who don't know what exactly a dividend king is, it is not just like a dividend aristocrat, whereas they've been paying out dividends and increasing them for 25 consecutive years. Dividend kings are companies who have been paying out dividends and increasing those dividends year over year for at least 50 consecutive years. So companies that aren't going anywhere anytime soon, you can expect to invest in them, kick back and relax, let passive income do its thing. Nonetheless, these 5 dividend kings are the highest paying dividend kings, aka the King of Dividend Kings. So with that being said, I want to make sure that we get to it in today's video. And if you haven't already, go ahead and just tap on that thumbs up button for me. It will greatly help me out in getting the Blue Lion Finance word out there and growing this channel. But moreover, if you personally have not already subscribed, go ahead and tap on that subscribe button for me, because I would certainly love to have you along the journey with me. Now, YouTube, with all that being said, let's get right to it. And wasting no time at all, jumping right to the first king on our list, we have 3M, that's ticker symbol MMM. Now, 3M is a technology company that's been manufacturing safety, industrial, and consumer products for a long time coming now. And when it comes to 3M, they are operating across industry verticals and have developed well-known brands from Post-it Note to Scotch Tape to Ace, and of course NextCare, which if you haven't heard, I am sure you heard of them in 2020 as they doubled down in their production of PPE, that's personal protective equipment for all those healthcare workers who are out there, or even simply just the common folk like you and I who needed mask supplies. Now, when it comes to their stock share price, we can see that just in 2020 alone, they made their big debut in terms of popularity amongst investors as their stock share price surged roughly 40%, where it peaked off at $205 per share before coming down to where it sits today at $195 per share. But let's talk about that dividend, because this is where it gets really impressive. 3M has an incredibly strong dividend yield currently of 3.02%, but get this, they've been paying out, increasing those dividends of theirs for 62 consecutive years, which means they have definitely earned a spot on this list. Now, in my opinion, is it the greatest time to get invested in 3M? Right now, I'm not exactly sure about that one, but definitely a company I would watch and make sure that if you have the opportunity to add it to your portfolio, to go ahead and do so. Coming up on the second king on our list, we have Coca-Cola, that's ticker symbol KO. Now, when it comes to Coca-Cola, I know I don't need to go into some detailed introduction of who they are and what they're all about, but I will share with you this. Coca-Cola was founded back in 1886, so of course an incredibly well-established company. They are going absolutely nowhere anytime soon, but I also want to share with you, they are the world's largest soft drink manufacturer that has developed not only just a brand name here in America, but they have become a global icon, so much so that Mr. Warren Buffett himself has of course made Coca-Cola one of his largest positions in the Berkshire Hathaway portfolio. And of course, literally every time you look at Warren Buffett, this guy is drinking a Coke, which makes for an incredible marketing and advertising tactics. Well played by Coca-Cola for producing such an incredible drink to get this guy to drink it every single time he's in public. But not only that, I want to talk about why some people claim Coca-Cola is one of the safest dividend investments that you can actually make. Of course, they have over 200 soft drink brands, and they have incredible marketing and advertising that seemingly only gets stronger each and every year. Now, on the flip side to that coin, some people are actually starting to dip away from investing in Coca-Cola, getting a little scared that that dividend won't be here for long. And that is because about 81% of their free cash flow is actually flowing into paying dividends. So a lot of people are asking, If all of that money is pouring into dividends, how are they going to continue to grow? That is a great question, but I will say this. In 2020, the pandemic certainly hurt Coca-Cola. But with a global reopening, I only foresee Coca-Cola once again being able to generate those profits and of course shell out those dividends for a long time to come. Speaking of those dividends, let's talk about Coca-Cola and what their dividend track record looks like, because they've been paying out dividends for 58 consecutive years, whereas as of right now, their dividend yield is sitting at 3.04%. And because they have never yet fully recovered from the pandemic, getting invested in them right now presents an opportunity to buy them on a discount. Prior to the pandemic, you could see here that they were trading for around $60 per share. As of right now, they're fluctuating between $54 and $55 per share, which makes for about a 9% discount on the day. Coming in at number 3 on our Dividend King of Kings list, we have Federal Realty Investment Trust. That's ticker symbol FRT. Now, when it comes to Federal Realty Investment Trust, we're talking about one of the oldest US REITs, real estate investment trusts, that you can actually invest in today as an investor. Now, primarily, Federal Realty Investment Trusts invest in shopping centers. They're heavily invested in California, Florida, the Mid-Atlantic, and Northeastern regions of the United States. They have over 104 properties and all in all, 2,800 different tenants across those properties. But let's talk about those dividends, because Federal Realty Investment Trust has been paying out their dividends for 53 consecutive years with a dividend yield of 3.62%, which is incredibly strong when it comes to a dividend yield. Now, as of today, they're actually currently discounted and they haven't fully yet recovered from the pandemic, as prior to the pandemic, they were trading for around $128 per share, whereas right now they're currently trading for around $118 per share, which is about an 8.4% discount. Coming up to the 4th Dividend King of Kings on our list, we have Northwest Natural Holding Company. That's ticker symbol NWN. Now, Northwest Natural Holding Company is a distributor of natural gas. They're serving over 140 communities with over 2.5 million customers throughout Oregon and Washington. They have one of the most modern pipelines within the United States, which tells me that they are continuously advancing in terms of their technology and their pipelines. But I will say something that's kind of a negative when it comes to Northwest Natural is the fact that they carry quite a bit of debt. They actually, as of right now, on their balance sheet show $1.19 billion worth of debt, and that is actually down from the $1.5 billion worth of debt that they showed last year. I will say it is an improvement, but just something to be cautious of. Not all debt is bad debt, and the very fact that they've been paying out those dividends and making their business work is a positive sign for me. But in speaking about those dividends, they've been paying them out for 64 consecutive years. And as of right now, that dividend yield is sitting at 3.68%. As of right now, taking a look at their stock share price, we can actually see that they are also discounted as of today, whereas they were trading around $63 per share, and as of right now they are around $53 per share, and that's about an 18% discount for you to get invested in today. Now, last but certainly not least, we have our 5th Dividend King of Kings on our list. And before I go any further, I just want to share with you that for some of you this may present a more ethical dilemma, but nonetheless, that's not what today's video is all about. It's not about ethics, it is about dividends and the highest paying Dividend Kings that are out there. So with that being said, the 5th Dividend King of Kings on our list is Altria Group. That's ticker symbol MO. For those of you not too familiar with Altria Group, this is a company that is the world's largest producer of tobacco, cigarettes, and other related products. What I will share with you is that although Altria Group was founded in 1985 and has been doing exceptionally well over the years, more and more the government is cracking down on cutting nicotine levels and of course getting more and more education out there for the general public to learn that yes, cigarettes are bad for you and cancer causing. Nonetheless, their products themselves are addictive in nature, so whether or not the economy goes up, down, left or right, this company is still producing revenue, still producing profits, and of course able to shell out those dividends. But speaking of those dividends, they've been paying them out for 51 consecutive years with an outstanding dividend yield of 7.23%, which is absolutely mind-boggling. Now, with a dividend yield like that, Altria Group certainly takes the cake for being the highest paying Dividend King out there. Again, all ethics aside, that is your dividend king of all kings. And there you have it. Those are the 5 dividend kings of kings. The dividend kings paying out the highest amount in dividends. Now, just before I actually close out for today, I want to leave you with one final thought. That thought being, over the last 40 years, 71% of market returns have not stemmed from capital appreciation, but rather from dividends. So I don't know what you're waiting for. Make sure you go add at least 1 or 2 of these dividend kings to your portfolio. And of course, as always, go ahead, tap on that subscribe button for me. It greatly helps me out in growing this channel, getting the Blue Line Finance word out there. But moreover, if you personally have not already subscribed, go ahead and tap on that subscribe button for me, as I would personally love to have you along the journey with me. Now, YouTube, until the next video, I'll see you there.